I do think that, again, we're continuing to see rising inflation, no matter what the Federal Reserve tells us about inflation. We just got more proof of that with the PCE on Friday, and it's very interesting. We're taking in 3% more, 0.3%, and we're laying out 0.8%. Well, to me, that sounds like how long until you go broke when you live at that thing. So I think that will continue to help gold and silver rise. And I think that, we have a very good shot at seeing, 2,500 this year. I would expect to see silver get into the 30s, maybe the mid 30s before year's end.
Todd "Bubba" Horwitz, a seasoned financial strategist and founder of Bubba Trading, paints a positive picture for gold, projecting a potential surge to $2,400 to $2,500 per ounce by year-end. Despite acknowledging short-term pullbacks as a possibility, Horwitz maintains optimism about gold's long-term prospects. Similarly, Bank of America's commodity analysts, led by Michael Whitmer, echo this sentiment, foreseeing gold prices climbing to $2,400 an ounce this year. The bank's confidence in gold's performance grows stronger as the year progresses, buoyed by the metal's recent record highs. While Horwitz acknowledges silver's potential, he notes its recent range-bound behavior. Nonetheless, silver saw a significant uptick to its highest level since March 2022, driven by robust private sector employment growth in March and increased demand for safe haven assets amid a dampened outlook for summer rate cuts. Despite some Federal Reserve statements downplaying inflation, Horwitz believes inflation is indeed on the rise, a trend that will likely continue to bolster gold and silver prices. In separate remarks to CNBC, Atlanta Fed President Raphael Bostic suggests that rate reductions may only materialize in the fourth quarter of the year, with an anticipated cut of only 1/4 percentage point in 2024, significantly lower than the expectations of his peers. Explore the valuable insights provided by Todd "Bubba" Horwitz and stay updated by subscribing to our channel. Thank you for tuning in.
I do think that, again, we're continuing to see rising inflation, no matter what the Federal Reserve tells us about inflation. We just got more proof of that with the PCE on Friday, and it's very interesting. We're taking in 3% more, 0.3%, and we're laying out 0.8%. Well, to me, that sounds like how long until you go broke when you live at that thing. So I think that will continue to help gold and silver rise. And I think that, we have a very good shot at seeing, 2,500 this year. I think that you're going to see it, probably sometime through the year. It's hard to say when. I mean, there's a greater probability of a pullback in the next couple of days or weeks because, again, you cannot go straight up in markets without some sort of pullback, because if they go straight up, that means that they're not healthy, and that means there's a bigger sell-off coming. So I'd like to see a pullback. Actually, even the 2,200 would be great, but certainly we could consolidate here and move our way higher. But I would think probably sometime, August, September, we could see that 2,500. Really, to understand what the United States government is doing is almost an impossibility, because, of course, they continue to spend money that they don't have. The Fed continues to create money that we don't have, and, of course, your deficit continues to rise. If you and I lived like governments live, we'd be either in bankruptcy court or jail, because, again, you cannot keep spending, and their lack or the refusal to put in a real budget and actually watch the dollars and really do something is creating this problem. So I think they are buying the metals to put themselves in a position, because I do think that we do have a financial calamity going on here. And of course, I think one of the reasons that the Fed may still be insisting that they're going to cut rates is because they see something that has not really hit the street yet, which is a much bigger problem. I think the banks have a very dramatic problem. I think the banks are very much over leveraged as they were in 2008. And again, remember that market collapses don't just show up in one day. There's a lot of information that comes out long before, and there's been a lot of things that just don't make logical sense in the overall markets right now. It seems like they're trying to control things. And of course, it is an election year as well, which creates another problem. I would expect to see silver get into the 30s, maybe the mid 30s before year's end. I think it's a great thing to own. And again, I warn everybody that you should have some representation of physical metals, because there's an outside chance at some point you may need these as a currency again. And, you can't be taking gold bars out there, because they're not going to give you change for it. So you're going to have some silver on hand as well, in case we need to use it as a currency. I definitely think they should pick up the actual gold. I think, listen, we can't account for exactly what's going to happen, right? We cannot predict the future, but certainly if you look at what is going on in the United States of America with the massive amount of illegal immigration, the massive costs, the things that are going on here, there is a lot of fear, and there is certainly a very real potential of another revolutionary war at some point. And I think this election will go a long way telling us where we're going. And I think that people are picking it up for those particular reasons. And I think it makes sense. When you look at it from a logic standpoint, it's a great investment, has been over history, which is why I always recommend to have about 10% of your net worth at least in gold or silver, or gold and silver, your choice. But again, it's always grown. It's a strong asset. It is something that you can own, touch, feel, and use if needed. And I think that is really where you need to be. And I think that's what some are starting to realize, is that those are very important assets to have in hand, because if the paper asset markets blow up, which again, they will at some point, as they've always done, having good physical metals in your pocket is a pretty good place to be.
The markets are eagerly anticipating the Federal Open Market Committee to implement policy easing this year. However, adjustments in expectations regarding the timing and scale of cuts have become necessary due to persistent inflationary pressures. Despite this, other economic indicators, particularly in the labor market and consumer spending, have shown resilience. This has allowed the Federal Reserve to carefully evaluate the current financial landscape before taking action. Todd Horwitz suggests that implementing a rate cut might worsen existing inflation and debt challenges instead of producing positive outcomes. Federal Reserve Chair Jerome Powell also commented on inflation, urging caution and emphasizing the need to wait for further data to guide policy decisions. Considering the economy's strength and progress in managing inflation so far, Horwitz further criticizes the Federal Reserve's management of the economy, labeling it a scam, and highlighting historical instances of central banks devaluing currency. Let's return to the interview.
First of all, I'm always questioning. Now, the data that came out this morning, ISM, that's a private number, so I'm a believer in that number, okay? But, government numbers, if you go back and look back at jobs, for example, 11 out of the last 13 jobs have been revised lower. The Americans have gotten 1 million less jobs than illegals have gotten over the last 3 years since Biden has been in office. So I think that the jobs market is weak. I think that the economy is weak. I think that every sign we look at, other than the stock market that continues to rally, says that there's a lot of issues here. And of course, that will help propel the price of gold and other precious metals higher, because of course that is a safety asset, it is an inflation fighter, and I do believe that will help. But at the end of the day, I think we have a very, very weak economy, and we are like just on the edge of being pushed over to a major disaster. I think gold listen, markets are pretty efficient these days. Everybody kind of knows what's going to happen. So gold knows that there's going to be a potential rate cut. Now, again, I don't see a rate cut, just to be clear. The only reason they would potentially cut, which would be August or September, would be because it's a political move for the election. But if you looked at the real situation, if you look at the numbers, if you look at the raw data, forget about its election year, forget about anything else, the economy is still too hot because there's still too much flowing through. So at the end of the day, you cannot cut rates into an economy that is already overheated and expect to have good results. And all that's going to do is create more debt for more people and really put everybody in a major jam and a major problems with their own finances. I'd be very shocked if the 10-year notes weren't at 6% by the end of this year. I'd be very shocked if the Fed does cut rates. But again, this is a political move. Remember, even though the Fed is supposed to be a private corporation, they still are influenced, and they could influence the election and the results of that election by some of the moves that they make. So I think they've done I think the Fed does a horrible job anyways. The whole scam behind the Federal Reserve and the way they've done it, I mean, the central banks have been stealing since the 1600s in England, and they've been devaluing currency since then, which is why the fiat currency system is nothing but a Ponzi scheme anyways, because there's no underlying assets to any of them except for the Swiss franc. You have banks that are well over leveraged. When COVID hit, they lifted the restrictions of what the banks could lend, and then they went back to the 10 for 1. But of course, there's a lot of accounting abnormalities that they're allowed to do, like borrowing from the Fed funds and turning that into an asset from a liability, which again creates more new money. We've never been in a position like this before, where more individuals have at least one credit card at limit that they're paying the minimum on. You can never get out of debt that way. You've got housing, although still strong, but slowing. And you've got housing builders now making deals on mortgage rates, giving cheaper rates. So you have a system that is well over leveraged once again. And of course, eventually, when it starts to fall apart, the over leverage really starts to come and play havoc on the investor, on the banks, and on the economy.
Peter Schiff, a prominent critic of cryptocurrencies, recently took to Twitter to liken silver to Bitcoin 2.0 amidst its notable price surge. He emphasized that silver had witnessed a remarkable 6% increase earlier in the day, contrasting with Bitcoin's decline amid financial strain. This comes despite Bitcoin recently surpassing silver's market capitalization, with both gold and silver experiencing significant price movements. It raises the question, what factors are driving these shifts in the precious metals market? Share your thoughts in the comment section. If you find the video resonating with you, consider joining our community by subscribing to our channel and enabling notifications with the bell icon. Thank you for being a part of our community.